Hey guys, welcome back to another video. Today I just wanted to go ahead and get right into it. It's going to be a real estate talk video. I've been seeing a lot of like videos and comments going around on TikTok and Facebook, and actually my friend Naya sent me a video or a tweet of people talking about their mortgage payments and how they're increasing. So I wanted to go ahead and do a short video on basically explaining how your mortgage payment works for the people that are confused, because I think there's some confusion going around, like why is their mortgage payments going up and they're supposed to be fixed, and mortgage payments aren't supposed to rise, and they're kind of confusing people. Let's start from the basics. So your mortgage payment is made up of four things. That's going to be your principal, how much you owe, the interest is basically what you're paying on your payment for borrowing that money. You know, they can't just give you the money for free, so they're going to get their money back, and that would be your interest rate. So your principal, your interest, your taxes, so that could be property taxes, water tax, whatever tax you have on that house, that's going to be your taxes, and your homeowner's insurance. And sometimes you'll have like private mortgage insurance, or you know, just different insurances, but most of the time it's your homeowner's insurance. You get a mortgage, and I feel like the average first-time home buyer or average homeowner has a fixed rate mortgage. Now there are different types of mortgage where your payment does increase, which could be like a balloon mortgage, adjustable rate mortgage, or an ARM, and we could talk about those in a different video, but we're just going to be talking about fixed rates because I feel like that's what most people have, is a fixed rate mortgage. So with the fixed rate mortgage, your principal and interest, which is your actual mortgage, which is your principal and interest, does not change. It stays the same. Your principal and your interest will stay the same the whole 30 years unless you refinance or something else happens, but it will stay the same. Now what will change is not your mortgage that changes, it's your taxes and your homeowner's insurance that changes. That's why we recommend that you shop homeowner's insurance constantly, and you know, just to try and make sure that you're getting the lowest rate possible. So what's happening to these people that are doing these videos is that their property taxes skyrocketed, because that has been happening. It happened to me also. And then their homeowner's insurance has skyrocketed. That also happened to me, and that's been happening to a lot of people. And because these people are paying into what's called an escrow account, which is a bank account with your bank or a third party, that where they put money to the side for you to be able to pay these things off at the end of the year, so you don't have to worry about it, and it's not a big bill and you're like, oh my god, I don't have the money. They put this money aside into that escrow account, and what's happening is that there's not enough money in that escrow account when it comes to them doing their escrow analysis. So they will raise up your payment to make up for what you did not have for the next year, and they're going to raise up your payment to be able to pay themselves back. So what they'll do is, okay, you're negative in the escrows, you don't have enough money, they'll go ahead and pay it, but now your escrow account is in the negatives. So not only are they going to change your payment for future references, like, okay, now we see what your bills are like now, so now we're going to raise up your payment so that it will cover whatever it is next year, since this is your payment now, and we're going to raise it up so that we can pay ourselves back and get you out of the negative. Now, most mortgage companies or loan companies, they will give you the option like, hey, you can either pay the negative portion, let's just say $2,000. You can either pay $2,000 today, or we can spread it out for 12 months and on your mortgage payment. And then at the end of that 12 months, we'll take it away. And as long as it hasn't gone up anymore, your payment won't go up anymore. And that is what is happening. Like, and when I'm talking to people, I tell them, yes, your property taxes can go up or down. Yes, your homeowner's insurance can go up and down. So yeah, some tips to combat that is always shopping around homeowner's insurance. Some companies will give you big discounts for being a new customer, or you'll find that some other company is cheaper. Like, shop around. Or sometimes even if you just tell your homeowner's insurance, like, hey, I'm about to shop around, you guys are too high, they might bring it down for you. So always do that. Don't just say, okay, well, this is my homeowner's insurance, and just take it. No, shop around, tell your lender that you're going to shop around, and then and that way you could try and find something a bit cheaper that will work for you. But I will say that right now, because of everything and the cost of like building things, they have skyrocketed with homeowners insurance. Now, when it comes to your property taxes, make sure that you're filing your homestead exemptions, which will give you a big discount. I will put right here on the screen exactly, you know, what it will look like with homestead exemptions, and I'll put a link to some more information about homestead exemptions in the description box. Now there are other type of exemptions as well. I believe there's like veteran exemptions. Make sure you get all the exemptions that you can, because it's going to take those property taxes down a lot, and it's going to prevent them from skyrocketing your property taxes. Like that actually happened to me. I did not have my homestead exemption yet because I had not changed my address on my ID. Come to find out, they accepted me without having to get a new ID anyway. So there's a fun fact. So yeah, definitely make sure that you're getting all of your exemptions. And then if you still feel like after your exemptions, like this is way too high, my house is not worth this, protest your taxes. Like take pictures of like the neighborhood, take pictures of your house, take pictures of what's surrounding you. Hey, it has not changed. Like my house is not worth $400,000 more than what it was last year. Yep. So give you a gist. Like I said, only the property taxes and your homeowner insurance rose, not your principal and interest. So your principal and interest has stayed the same. What you need to do is figure out if there's anything that you can do about those property taxes and insurance. It is scary when it comes to being a first-time home buyer, because sometimes they do buy at the top of their means, like, hey, I can only afford this mortgage payment, and this is why I recommend you never buy at the top of your budget. Like, do not get the absolute most that you can get and get that absolute, like, oh, dead end, this is the highest monthly payment that I can afford. Try and buy below your means, which is kind of really hard in today's economy, I will say, but just try your very best to try and get something lower. Just get a starter home and then work your way up from there, because when you do that and then your property taxes go up, or your more homeowner's insurance goes up, now we're just, now we don't know what to do because it's too high and then you can't afford it. So yeah.